Hello everyone, welcome to the Ichimoku.co chart of the day. To the S&P 500 and a change of trend to the upside for today, candle forming a higher high and a higher low. Black body candle forming, suggesting that net momentum has shifted back to the sellers on an uptrend, so it doesn't give us a lot of faith in the trend extending further to the upside at the moment. Also, the sellers have closed with control with this candle closing down towards the low. And we have seen a loss of commitment as the market was testing to these higher levels above that previous swing high around that 24.46 level. The loss of commitment by the buyers and the sellers taking control does suggest that there is an opportunity here for the sellers to change the trend back to the downside, and does raise doubt about whether we will see this trend continue to the upside. But as always, we do require confirmation of any changes of trends. Important also is the support coming in around the Tenkan-sen indicator. If we look at the previous selling about 5 days ago, we had a very strong black body candle. The sellers in control, strongly committed to a downside move here, but then a lack of follow through around the Tenkan-sen indicator, and only one close in that time period over the last 4 days, and it hasn't been a very strong close down below there. So this Tenkan-sen is a very important benchmark for us moving forward. And if we look back here at our history, and the last close that we had below there was in the middle of May, and we didn't see any strong follow there previously. No follow through there, and importantly at that stage we did see the cloud coming into play. So if we do see a strong bearish close down through there with some follow through, we could see the market testing down to around the Kijun-sen indicator, possibly even through, but at the moment we don't have any indication. So that is a very important benchmark for us, that Tenkan-sen indicator, the green line. Importantly, in terms of Ichimoku, we still do have a bull market in the longer term time frame by trading above the cloud, and in the medium-term time frame by trading above the Kijun-sen, the pink line here, and just bullish in the short-term time frame by trading just above the Tenkan-sen indicator. And the Chicken span here is above the corresponding price action, so it's supporting still with upside momentum the bullishness that we're seeing in all three time frames. Now, just looking to our areas of support and resistance, and just suggesting if we do see the market trade through the Tenkan-sen indicator, we are likely to find some strong support at that previous swing high, and the market has tested to this area at 24.18 in recent times, and it is an important area for support if the market does change trend back to the downside, and if we do see the market test down around that level. If that area is breached, then we will be looking for strong support to come in at the Kijun-sen, which at the moment trades at 24.12. Now, just looking to the Heikin-Ashi candles, and the Heikin-Ashi candles are suggesting we have some bullish activity entering the market here today, and suggesting there's an opportunity for some upside. If we look at these previous candles, as the market was retracing, we had fairly weak candles, very small body candles with a shadow on the top and the bottom. So even though the sellers were attempting to move this market lower, there wasn't a lot of strength behind the move. But now, with this larger white body and no shadow on the bottom, it does suggest that we are seeing some strength from the buyers. So Heikin-Ashi candles is suggesting we could see the market trade to higher levels and perhaps test back up to that previous major high. Now, just looking at the bands here with the S&P 500 on the daily charts and just normal candlesticks here, and previously over the last 5 days or so, we have seen the market trading within the bands. We previously had trading activity above the upper band, and that did signify a fairly strong bullish tone, but now by trading within the bands, it does suggest that even though we are still bullish, we're maintaining price activity above the middle of the bands. We are trading within the bands, so there isn't a strong bullish tone, even though there is still a slight bullish trend here. Importantly, today the market tested out through the upper band, and we're unable to maintain the close above that upper band, and it does suggest certainly that the buyers are losing their strength as they move up through there. Doesn't mean that we won't see a close eventually up there. What's more important, however, is that we now see the band starting to squeeze, and we know that volatility, which tends to manifest itself as trending activity or congestion activity, it does suggest we are moving in a cycle of lower volatility, so we're seeing congestion here in the market attempting to retrace and mean reverting. It does suggest that we certainly could see some trending activity soon and volatility coming into the market, so looking for a breakout in either direction. Importantly here, the middle of the bands has been holding a support, and that will be an important benchmark for us. I suggest that if we do end up trading down below that middle of the bands in a bearish manner, we could be seeing the start of a potential transition into a downtrending phase, but at the moment this is certainly not suggesting that there will be any significant downtrending activity soon, with us trading above the middle of the bands. Let's go next over to our market breadth indicator, our cumulative advanced decline line, and here we see that market breadth is signifying that the market is fairly healthy, the overall market, and we see the market breadth trading above its 50-day moving average benchmark and above the bands here, suggesting that there is some strength. So certainly no significant warning signs of weakness in terms of market breadth, and suggesting that the overall equities market is still fairly healthy. And just looking to our sentiment indicator, the VIX indicator, and the VIX is trending lower. It is at a fairly low level, so suggesting that there isn't any great fear entering the market at the moment. We have our VIX oscillator very close to that at minus 5% level, and suggesting that traders are feeling fairly comfortable with the position of the equities market at the moment. And there isn't any great fear entering, any great fear for a significant downtrend at the moment.